Hi everyone, today we are going to talk about the RRSP, the Registered Retirement Savings Plan. I'm going to talk to you about a unique and creative way to contribute to your RRSPs. This approach will help you generate an extra few $1,000s than you would have using the same old traditional approach to RRSP. This is a very quick, simple, practical method, and for Canadians, this is the best time to implement this strategy. So, most Canadians are aware of the basics of RRSP and how contributions made to your RRSP account can potentially create a tax refund. But what most people don't realize is even if you don't have the funds available to contribute any further, there are other creative ways where you can make yourself an extra few $1,000s. And let me show you how. In this video, I will show you how you can generate extra money for yourself even if you don't have any funds available in your bank account. It's simply a matter of borrowing money or taking out a line of credit and contributing those funds to your RRSP account. This way you can create a big enough tax refund to pay back the borrowed money right away and walk away with more money saved into your RRSP account. Now, let me show you an example of two guys. Let's call the first person Joe, who will contribute to his RRSP the traditional way, like most people do, and the second person Mark, who will not only contribute the good old-fashioned way, but he will also implement the strategy that I've just mentioned. Let's assume both Joe and Mark earn the same amount of money and fall under the 40% tax bracket. Now, if you don't make as much money and you fall under a lower tax bracket, don't worry. I will present another example of a lower tax bracket. Since most Canadians do not maximize their contributions to their RRSP accounts, let's assume both Joe and Mark have an extra contribution room available on top of the $10,000 that they have already contributed during the year. For simplicity's sake, let's keep all other things equal between the two individuals. Joe, who contributed $10,000, will potentially create a refund of $4,000. Whereas Mark, who also contributed $10,000, and if he borrows or takes out a line of credit for $6,666 and contributes that amount to the RRSP account, for a total contribution of $16,666, will get a tax refund of $6,666, which is exactly the same amount that he borrowed. Now, let's compare the results of the two individuals. Joe has savings of $10,000 in his RRSP account. And if you add the $4,000 in tax refund he's going to get, Joe gets a total of $14,000. Whereas Mark now has savings of $16,666 in his RRSP account. Mark will use his tax refund of $6,666 to return the borrowed money. So as you can see, Mark is ahead of Joe by $2,666. And remember guys, most people end up spending their tax refund. So if Joe ends up spending his $4,000, he will only be left with $10,000 in his savings account. And in that scenario, Mark is ahead of Joe by $6,666. Now, let me show you an example of a lower tax bracket. Let's assume both Joe and Mark are in the 30% tax bracket and both have contributed only $3,000 to their RRSP account during the year. Joe, who contributed $3,000, will get a tax refund of $900. And Mark, on the other hand, who also contributed $3,000, and if he goes on to borrow or takes out a line of credit for $1,285 and contributes that amount to his RRSP account for a total contribution of $4,285, will get a tax refund of $1,285, which is exactly the same amount that he borrowed. Now, in this scenario, Joe gets a total of $3,900, whereas Mark now gets a total of $4,285. Even in this example, Mark is ahead of Joe by $385. And if Joe ends up spending his $900 tax refund, Mark will be ahead of Joe by $1,285 in his savings account. Now, here's a simple formula to figure out how much funds you need to borrow to generate a high enough tax refund to return the borrowed funds. So you guys can apply this approach according to your own situation. Divide the RRSP contributions that you have already made during the year by this formula, which is 1 divided by the tax bracket that you fall under minus 1. So in the case of our last example, here is how I calculated how much Mark needs to borrow. Mark contributed $3,000 during the year, and Mark falls under a 30% tax bracket. So the simple formula is $3,000 divided by 1 divided by the 30% tax bracket he falls under, which is 0.3, minus 1. And Mark gets a total of $1,285 that he needs to borrow and contribute that amount to his RRSP account. Now, before you guys start applying this method, here are some points I want you to consider first. As I mentioned earlier, most people end up spending their tax refunds instead of saving them. So in this approach, you are using the tax refund to return the borrowed money. So if you are planning on using that tax refund for another purpose, then this approach may not work for you. Also remember guys, you can apply this approach to your savings account. You don't have to borrow money. If you have an account saved up for miscellaneous expenses, and if you think you will not be incurring those expenses for at least a couple of months down the road, then you can use those saved funds instead of borrowing money. That way you will end up getting the same money back by your tax refund. Also, remember guys, you will be incurring interest cost on borrowed money or line of credit. So the best approach is to plan it in such a way that you end up spending as little time as possible between borrowing money and filing the tax return. Also keep in mind that it usually takes a couple of weeks for CRA to issue tax refunds. And lastly, for the 2016 year, you have until March 1st of 2017 to contribute to your RRSP account so you're able to claim that amount in your tax returns. I hope you guys enjoyed this video and I have given you something to think about. I will be coming up with more videos in the future related to finance, accounting, and tax topics. So please stay tuned. And if you have any questions, please feel free to post them in the comment section below.